Most traders spend more time hoping their stock picks will work out than actually knowing why they chose them. They take tips from friends, chase headlines on CNBC, or blindly follow analyst newsletters, only to wonder later why they're stuck holding losers. Some common but flawed approaches to picking stocks are relying on tips from friends, relatives, or coworkers. I'm sure they mean well and they may have had some luck, but do they really know what they're talking about? Even if they do, their experience with the stock may not be repeatable. Some people watch the CNBC or other financial news for ideas. These people don't have crystal balls. Jim Cramer is a popular TV personality, but he's been wrong so often that some people talk about a trading system that just does the opposite of what he says to do. Others buy stocks recommended in newsletters written by stock analysts. I'm guilty of following one of these newsletters in the past. When the housing crisis hit in 2018 and most people lost half their retirement funds, including myself, I had been doing some trading on the side with recommendations from a newsletter. Their reaction to the crisis? They canceled all subscriptions and folded. I never used one again. These methods lead to inconsistency and emotional decision-making in your trading. If you take a tip from a friend, you feel pressured to buy the stock to make him happy. Then if you lose money on that trade, it puts a strain on your relationship. Or if you get all excited about a stock because Kramer is all excited, you're not making rational decisions. And all these methods lack an edge because everyone sees the same information at the same time. Relying on fundamentals, which is what all these people are doing, gives you no edge in the markets. A better way is to use a stock screener. Most trading software or charting websites have a screener. With a screener, you can find the stocks that meet your specific criteria. If you're a trend follower like I am, you can screen for stocks that made a new 52-week high, or trading above a 200-day moving average, or meet the specifics of your favorite indicator. Filters help you focus only on stocks that meet your criteria, and it takes emotion out of the process. It's also more consistent, repeatable, and measurable. It helps you find stocks that are aligned with your system. Here's my criteria and why I use it. I look for trending stocks, usually in a clear uptrend, using moving averages. So I screen for stocks that have their 25-day SMA, that's simple moving average, over their 50-day simple moving average. And also want to see volume, at least $50 million in average daily volume. The reason is you want to get in and out as close as possible to the price you specify in your orders. If trading is thin, that can be hard to do. Volatility. You have to have volatility, enough movement to make the trade worth it. A stock that barely moves can't make you any money. I rank the results of my scan by percent change over the last 200 days and go from the top. Liquidity is another important criterion. I don't want to be trading penny stocks or thinly traded names. So the price should be greater than $5 a share. This criteria gives me plenty of stocks as a starting point to determine if they're actually trending and in which direction. So these are the hot stock tips to the masses. If you want to make money, develop your own system and screen for stocks that fit that system. If you'd like a free training on how to protect your position once you find a stock you want to trade, write the word screen in the comments.